When we think about hydrogen, it's not an old energy source. It's been around for many decades, but for a long time, and still now today, about 95% of it comes from fossil fuels like methane and coal. So it hasn't been seen as a clean energy source. And with the current way in which we're all thinking about net zero emissions, how do we be cleaner in our energy usage or, energy resources? And, battery technology is an example of that. And a lot of focus has been on there. Hydrogen is starting to get more focus, and it's sometimes called the Swiss Army knife of decarbonisation because it's very versatile. Because essentially it can remove carbon dioxide from a lot of highly pollutant industries. So think about steel making or ammonia production, which is very important in agriculture, or even shipping. You potentially have an ability to have a clean energy source that leaves a close to zero footprint on the environment. And I think that's what's really people are focusing on at the moment, and that's what hydrogen can definitely provide. And I think that the key part around that is the whole idea of green hydrogen. So in terms of what is green hydrogen, it's essentially, it's created by using clean energy to split water into hydrogen and oxygen. So it promises to really be quite a energy revolution. There's some really important stats, but it can replace hydrogen generated from fossil fuels. And that's where the future is. So the reason why hydrogen is important now, the reason why there's a lot of focus on it is because of that green hydrogen and where it could eventually lead us. I think it's a combination. So there's social change from a perspective of how we want to live our life. We talked about, there's urbanization, there's population growth. We are seeing the need to find alternative energy sources outside of oil, fossil fuels. Technology is a big one. And we've seen that in battery technology, and we've seen it in a lot of other areas, that when you have advancements in technology, it opens up innovation in certain industries. So if hydrogen's been a source of energy for many decades, why is it so relevant now? It's because there's been advancements around how we can obtain hydrogen using essentially what's called electrolyzers. So it's electricity that zaps water to split out hydrogen and oxygen, and you capture that hydrogen, and essentially that is what is green hydrogen. So that technology aspect. Another big part is cost. So as you get advancements in technology, costs start to come down. The opportunities for the hydrogen economy, the megatrend, is quite vast. So if we get to this point in terms of making a clean energy solution, it can be used in airplanes, in ships. It can be used to make things such as from an agricultural perspective. So it could help the world feed itself, for example. So if you think about ammonia and fertilizers, which helps crop grow, well, hydrogen is used in that process. So if you can make a cleaner way to make that fertilizer, well, then that's going to help us. Even in traditional construction, so making materials such as steel and iron. So that's really important. In terms of the potential growth of the opportunity, so currently, it's about $142 billion in 2019. Bank of America is suggesting that the hydrogen economy could be anywhere of up to $4 trillion in revenue by 2050. So from $142 billion in revenue in 2019, fast track 31 years, we could be hitting about $4 trillion. In terms of the energy market, it's currently making about 5% today. And again, Bloomberg NEF suggests, and that's an energy research firm, suggests that hydrogen could take up to around 25% by 2050. So still a lot of growth to be had. And it's still very early stages from an investor standpoint. There's still a lot of potential here, a lot of new companies still coming to the market, especially within that green space. So ETF securities, we've launched the ETFS Hydrogen ETF, and the code for that is HGEN or HGEN. It tracks the Solactive Global Hydrogen ESG Index. And at a high level, that index and this ETF invests in 30 stocks from developed markets, plus Korea and Taiwan, that have a heavy exposure to hydrogen. It's important when we think about thematic ETFs, and it's a question we tell investors to ask themselves is this thematic ETF a pure play? Because when you're investing in a thematic ETF, you want it to be as closely aligned to the theme that you want exposure to. So we took that question when we're developing the product and when we're talking to index managers to say, does this index closely align to the theme that we're wanting to achieve? And so within this index, it targets pure play companies. So pure plays that produce, from the hydrogen value chain. So in the way in which you think about it, anywhere from the fuel cells, which is essentially like the engine that turn hydrogen into electricity, the components that make those fuel cells, the hydrogen refueling stations and other infrastructure like storage, and even the companies that generate or build those electrolyzers. So those machinery, the equipment that produces that green hydrogen. So it's really an all-encompassing approach to looking at the hydrogen economy. The approach to have a concentrated portfolio is because we want to provide investors with an ability to target a specific theme. There is broader exposures. You can get potentially some of this exposure through broader markets or broader sectors. But within this space, in terms of when you're thinking about megatrends, it has to be country agnostic, it has to be sector agnostic. And we're giving an investor the ability to say, well, if I want to take exposure, I want to be overweight the hydrogen theme. How do I do that? And there are some Australian names, not in the portfolio at the moment, but there are Australian names that are starting to get involved in hydrogen. It's important to, I guess, give investors the option to look further afield, because it's more, especially within this megatrend, there are probably companies outside of Australia, the US, Korea, Taiwan, etc., Europe, that are doing more in this space than we are. So as I mentioned, the ETF is tracking an index from Solactive, but it comes down to a really crucial point, which is in that product development process, when we were trying to identify the index that truly represented the hydrogen megatrend, how do you do that? So there's no sector classifications, there's no industry classification, because when you're looking at megatrends, often they're sector agnostic and they're region agnostic. So what Solactive did was, Solactive have what's called Artis, and Artis is their proprietary sort of natural language processing algorithm. Essentially, it's an AI keyword tool that they've created. And they used Artis to identify companies that are expected to have a significant exposure in the field of hydrogen. So that is the most important part. So we're looking at companies that are truly exposed to the hydrogen thematic. But what's more important actually is, what are we not looking at? Because that was really, really relevant to us. The universe excludes, so the 30 stock portfolio that the portfolio is based out of, the universe is excluding oil companies, it excludes motor vehicle companies. And because we really wanted to highlight and focus green hydrogen, which we believe is the future of this particular megatrend, we have excluded oil, coal, and gas companies as well. So any company, and most of those companies are very much involved in the grey and the brown hydrogen, have been removed from the index. Mm. And a final key point, I guess, is, again, in an area which is all talking about the green environment being clean, we've also applied, and the index has applied, an ESG filter. So that uses data from Minerva Analytics to exclude companies that are involved in controversial weapons, small arms, tobacco, and fossil fuel. So no fossil fuel companies exist within the index. In terms of some stocks, so as I said, it's 30 stocks from around the world, but one of the most famous is Plug Power. So Plug Power, it's famous relating to the hydrogen economy, and essentially it primarily makes fuel cells that turn the hydrogen into energy. So their fuel cells operate in very niche transport areas, things like forklifts, for example, and they've got big contracts with Walmart, Amazon, etc. And they're also looking to expand along this space in terms of green hydrogen and their sort of technology across different transportation. So that's a really important one. Another one is Nel. So Nel is a Norwegian company. Now it's a company that actually, it's one of the oldest companies that has produced green hydrogen. So it produces hydrogen from water, and it has its sort of fingers in many pies. So the hydrogen that it produces historically has gone to ammonia. So that then goes into fertilizer. But it also runs one of the world's largest refueling stations, which tops up the tanks of hydrogen, buses and cars. And I think the last one, and really important with Nel, so is it works with Tesla's competitor Nikola to produce the electrolyzers at its refueling station, so widening out hydrogen's infrastructure. Outside of some of those, obviously, we've got companies like Bloom Energy Group and Doosan Fuel Cell as well. So I think with this one specifically, it's important to understand that it is a growth ETF. It is a growth-oriented ETF. It's looking at an investment, a thematic, an opportunity that has, in the long term, a lot of investment opportunity. But in that period, there will be inherent volatility that the stocks and the ETF may have over and above a broad market. So that's important. So it is a long-term investment. The other, I guess, risk that people may have is potential overlap. Now, we've done our research in terms of overlap of this ETF to our other thematic ETFs, and it's very minimal, if non-existent, to our other exposures. So because of the megatrend and the theme that we're focusing on with hydrogen, there is minimal overlap. But for some of the other investors, you talk about lifting up the hood with, and that's what we often talk about, is open up the portfolio, understand the index, understand what it's looking at, and are your values aligned to this theme? Is your portfolio also not having as much duplicate exposure? And if it's not, well, then there's potential there for you to have a truly diversified investment within your portfolio that is different also to the rest of your portfolio.